So, this week was another Federal Reserve meeting, and for the third time in a row, third straight meeting this year, the Fed has decided to keep rates unchanged. This was a surprise because of the lobbying from President Trump, from Vice President Mike Pence, and from other key players in the Trump administration who have been lobbying for the last couple weeks for massive rate cuts. A month or more ago, Larry Kudlow and others were asking for 50 basis point rate cuts, which is 2 rate cuts because the Fed normally goes quarter point up, quarter point down when they do rate cuts or rate hikes now. And the requests recently have been even more drastic. So let me read what Trump put out, the exact tweet. This is from April 30th, 2019. It's 2 tweets. So China is adding great stimulus to its economy while at the same time keeping interest rates low. So he's applauding China for market manipulation and economic central planning. I added that. Obviously, he can't put all this stuff into Twitter. I'm not sure if he even knows Austrian School economics. Although, if you look at some of his old tweets, he seems to know some of this stuff, at least. Our Federal Reserve has, back to his Twitter, our Federal Reserve has incessantly lifted interest rates. Interesting he chose to use incessantly. Normally, incessantly means annoying. Even though inflation is very low, and instituted a very big dose of quantitative tightening. We have the potential to go ... next tweet, ... up like a rocket if we did some lowering of rates, like 1 point, and some quantitative easing. Yes, we are doing very well at 3.2% GDP, but with our wonderfully low inflation, we could be setting major records and at the same time make our national debt start to look small. Well, yeah, it's magic if they could just do QE and reduce the debt, right? If they can manipulate interest rates, keep the currency from collapsing, if the economic central planners could allocate capital perfectly like John Maynard Keynes advocated for, because he didn't want people to have savings. Remember, he wanted to euthanize the rentier. Keynes wholeheartedly believed that PhD economists, that bureaucrats with multiple degrees could allocate capital better than the average person with savings. And for Trump to even talk about inflation being low is just ridiculous. Mike Pence has reiterated the same stuff. We've actually heard a ton of that from a lot of people, whether it's the mainstream financial media and other people, reiterate how low inflation is. I guess a lot of these people, Vice President Mike Pence and others, and people on Wall Street, other rich economic and political elites, whether they're a PhD economist making 6 or 7 figures or others, they must not do their own grocery shopping, because you know what? I go to the grocery store a couple days a week, and it just seems like every couple months the prices go up. So if I buy a couple things now, it's like $30. If I buy more than a couple things, it's like 40 or 50. And I don't remember that occurring even a couple years ago. It was maybe 20 a couple years ago. So it seems prices are going up. Obviously, in the official government inflation data, which is economic propaganda, in my opinion, all the governments are doing it. That's not counted as inflation. But in the real world, I guess when you make a 6-figure, 7-figure salary, you have all these side gigs with extra money coming in. You have so much extra money coming in each year because people are bringing you more business. You don't have to worry about the prices going up like that at the grocery store or shrinkflation or those things. Okay, anyway, let me read what Mike Pence had to say on May 3rd, which was today, although when we finish the show, it might end up being May 4th. So Vice President Pence says in an interview the Fed should cut interest rates, reconsider its dual mandate policy. Quote, I think it might be time for us to consider lowering interest rates, end quote, Pence tells CNBC's Eamon Javers. Well, why does he want to lower interest rates in the greatest economy of all time? If we really do have the greatest economy of all time, it doesn't make a whole bunch of sense to want lower interest rates. So clearly they're aware of the reality of the situation with the corporate bond market. I could go on and on, the subprime auto loans, student loan debt. There's just so many economic landmines and credit bubbles all over. So Pence's comments fall squarely in line with the rest of President Trump's confidants. So basically, they're putting this out there. They're trying to pressure the Fed to cave. Eventually, the Fed will not cave. Eventually the Fed will cave because the Fed is not really independent. Let me give you a historical example of this. So from the American Economic Association, evidence from the Richard Nixon tapes now available to researchers shows that President Richard Nixon pressured the chairman of the Federal Reserve, Arthur Burns to engage in expansionary monetary policies in the run-up to the 1972 election. This paper quotes the relevant conversations from the Nixon tapes. Questions remain as to whether Burns followed an expansionary policy in an already inflationary environment out of conviction or because of political pressure. So I will attach a link to that if you want to download the full audio transcripts from the Nixon tapes there concerning Arthur Burns. But history doesn't always repeat itself, but it does rhyme, and it seems that President Trump is taking another copy of Playbook out of President Richard Nixon, and he is pressuring now where we've supposedly had the longest economic expansion already, according to the government data, or it's very close. It's either we're at record levels, another couple quarters, I think, and we'll be at the longest economic expansion in American history, officially with the government economic data. And here we are, President Trump trying to claim how great the real economy is, asking for a massive rate cut. That is 4 rate cuts, not 1 or 2, 4 quickly, and then QE. And let me give you some background on Trump. So for those of you who are not familiar with Trump's business career, if you are familiar with Trump's business career, what Trump is asking for now should not surprise you in the least, okay? Because Trump was a very big, high-risk borrower for commercial real estate development. And so he took almost as much money and credit as he could borrow. He took the maximum. And then sometimes he took more than that. And that's why he went bankrupt so many times, is because he drastically over-leveraged himself. He made enormous bets. And if you read his books, and I've read like 3 or 4 of his books, including Art of the Deal and Thinking Big, he always thinks very big. So he's thinking now that if the government inflation data shows no inflation, and he was like, if we can lower the interest rates, we can borrow all this extra money and spend it on infrastructure or some other type, maybe upgrading the military or some other type of project, and get away with it. But in Trump's in his personal life, in his private business career, he was able to survive bankruptcy. And in a lot of cases, even when he overborrowed, even when he screwed up deals, even when, the real estate market went bad, the banks ended up coming back to him, only a couple years later. Maybe it was the same bank, maybe it was another bank, and he was able to start getting more loans, start doing more deals, start building again. So Trump, for those of you thinking, well, why would Trump ask for this much money? Trump is sticking to things that worked for him in his business career, in his private life. So in spite of the bank, how many people do you know actually recover from bankruptcies, even one bankruptcy as well as Trump has? Almost no one. I know people have went through bankruptcy. It's been pure hell. Okay, the majority of people do not. Now, a lot of these real estate guys do go bankrupt at least once. I do know like stock traders who have screwed things up and, either gotten fired from their hedge fund trading job or fired from their trading job on Wall Street, and they had a problem for a while. And, maybe, I think Jim Rogers even admitted this, that he went bankrupt at least once because he got greedy on margin debt. He was shorting something and he ended up being right, but he screwed up the timing. So he lost the money, even though if he would have not tried to time things as quickly, it would have played out the way he thought. But Trump is the master at maintaining his brand and getting banks to give him even more money and credit even after a bankruptcy, or getting other investors in. And so Trump is basically doing what he was able to do throughout his commercial real estate career and his private life. That to me is what his requests are now for this 1% rate cut, just a massive rate cut, and also the QE program is a page out of his long career in commercial real estate. The other thing, and I've been working on a slide deck for this with research and sources, so hopefully I have more work to do on that. I've already spent quite a few hours on this. I may be able to release that sometime by the end of this week, and if not, it'll be released hopefully sometime next week. I still have more work to do on it, but I'm going to show you guys that I wanted to do research on how quickly the national debt is growing, because in February, we hit $22 trillion. So I wanted to go back and see how quickly we're adding to the debt, whether it's a Republican president Democrat president, different Congresses, etc. And we seem to now, the debt has reached a certain level of negative compound growth because, when you have interest payments on debt, that's not positive beneficial compounding. Well, at least not for the borrower. Now, for the lender, it is if you get paid back, because then you'll make a return, because one man's asset is another man's liability. And this is why you can't fully wipe all debt and all bonds and stuff like that, because how are the investors going to be made whole? So that's an issue for the people who are talking about a debt jubilee and wiping all debt away and wiping all bonds away. Well, for some people, that's an asset on their balance sheets. For banks, those loans and stuff like that are assets. For other investors who invest in bonds, those are assets. So it's not a simple solution. It's not as simple as we just do a debt jubilee and everything's fixed. Things are not so simple, I think. Some people think they are. Maybe the MMT people think they are, that they'll just print the currency and print unlimited currency and then buy the bonds, and everyone will accept the currency and the currency won't be devalued and foreigners will take the currency and it won't lose purchasing power, blah, blah, blah. And if there is inflation that in MMT, that they could just tax it away. So I wanted to bring that up about past historical similarities to how past presidents have pressured Federal Reserve Board of Governors, either Fed chairman or Fed Board of Governor members. Either they stack the deck with their own Fed Board of Governor members, or they pressure the chairman. So Richard Nixon did it with Arthur Burns in the 70s, and I believe there was a handful of other ones. I think either JFK or one of those others in the 60s did it as well. So there's other historical precedent for when presidents are not getting their way, they start to threaten a fire or other things with the Fed chairman. So it looks like Trump's going to be doing this, and eventually, I don't know an exact time frame on this, but I would suspect in the next, probably by the end of the year, Trump will get his way. He already tried to put, Steve Moore and Herman Cain, he tried to stack the deck there and put on people that would do his own puppets. And Steve Moore's like a supply sider, and Herman Cain does have a good business background. And he, chairman of Godfather Pizza, and I think he was also on the Board of Governors at the Kansas City Federal Reserve. So he did have decent credentials, but the Democrats are not letting any of his people go, and they did have some scandals, some small scandals. Okay, Shiva Satisfaction says, aren't we already living in a form of MMT? No, Keynesian economics is bad, but it's not nearly as bad as MMT. MMT it's John Law quackery. It's even worse. MMT says literally unlimited amounts of currency. If you want to, I brought up Stephanie Kelton. She is the economic advisor for Bernie Sanders, and she repeats this and makes jokes about it. She is adamant that unlimited amounts of dollars can be printed and that the U.S. will not have inflation and not have hyperinflation. And I would argue that the purchasing power of the dollar is going to keep going down, and the government economic data might not reflect this, and the government inflation data might not reflect this, but in the real world, your bills on everything are going to go. If you think it's bad now with stagflation, with 8 to 13% per year inflation in major U.S. cities, and that's the annual inflation rate that I have according to the Chapwood Inflation Index. If you think that's bad now, if MMT is allowed to increase things even faster, things will get even crazier. And then on top of the purchasing power loss, the other thing is, if foreigners realize this, are you going to have foreign governments want the dollar then? Because right now, a lot of foreign governments are borrowing in dollars. They're still transacting in dollars. And yes, you do have some countries that are dumping treasuries, but overall, a lot of countries, if they had their choice of currencies to take, they still prefer the dollar right now over other currencies, especially over the RMB. The RMB is just not a high-in-demand currency right now. And if you want more analysis on that, I encourage you to listen to the recent Kyle Bass interviews that he did for free on Hedgeye and elsewhere. The hour-long one that I've linked to in live streams last week and the week before. He goes into detail about this. How China's saying that they have the second largest economy, but the transactional currency of the RMB is only 1%, when China says that they have 15% of total world GDP, but their currency is only being used at around 1% globally. 1 or 1.5, something like that. It's a really low number relative to the GDP claims, the total GDP that China claims to have. So MMT can make things worse. As bad as things are now, and we have stagflation now in the real economy, MMT can accelerate that. On top of that, MMT would probably accelerate the tax burden. Unfortunately, I think the tax burden is going to increase, but if there's even more inflation and people's costs are rising and government employee salaries have to go up, well, guess what? That means that you, the taxpayer, and you, the private sector or small business, you're going to have to pay more in fees. You're going to have to pay more in taxes to cover those either cost of living adjustments for people on social programs or government employees or government retirees or higher salaries. And there is a mandatory, I believe, for federal government employees here in the United States, there is a mandatory 1% or 2% per year mandatory salary increase every year. So it doesn't seem like a lot, like a 1% increase, but the average person on Main Street is not getting that. So over time, if you're there in the government for a long time, it does add up. And there are a lot of people in the federal government that have really cushy jobs that make $100,000 or more, and they really can't be fired, and they have like really enormous pensions. And look what's happening with like Andrew McCabe and Peter Strzok's probably going to go to prison, but Andrew McCabe isn't even going to lose his pension. And he committed it looks like he committed all these crimes. And he's still going to get to keep over $1 million of his pension, and he's going to get all these private sector gigs. I don't think he lost his security clearance yet. I can't remember if he did or didn't. But a lot of these guys didn't lose their security clearance because that's even more paid. If they keep their security clearance, even if they're criminals in the government, it's kind of an unwritten rule that even if someone does a bad job here around the DC metro area, that you don't pull their security clearance, because then that means that they don't get any more high-paying jobs as consultants or private sector or contractors or lobbyists or things like that. So once you get a certain level of security clearance, even if you're not in the military anymore and you're not in the government anymore, you can still get a big payday from having that security clearance. And that's why they don't pull those things. They should. Security clearances should be removed immediately once you're out of the government, but they don't do it. And that's how, this corrupt system, that's how the parasites continue to get rich and siphon more wealth away from us. Okay, so we had one listener bring up my thoughts on the Canadian housing market, and I forgot to bring this up last time. I just remembered this. So there's an interview. You can go to the BNN Bloomberg YouTube channel, and there's an interview with the Big Short's Steve Eisman, E-I-S-M-A-N. It's Canada's bank CEOs extremely ill-prepared for credit cycle. So I just encourage you to listen to that interview, and the lady interviewing him is really bitchy at him. Like she interrupts him constantly. She claims he doesn't have good information, and she's just pro-Canada, pro-banks, because the banks sponsor a lot of the business channel there on BNN Bloomberg, because Bloomberg just bought BNN, I guess. And he lays out Steve Eisman lays out the case for why he thinks a lot of different Canadian banks are going to drop. The shares are going to drop 20% or more in the next few years, under 5 years. And he explains in detail. So he talks about how the banks just don't have enough loan loss reserves and other reserves in place for losses on real estate and credit cards and those things. The banks just have really bad models and projections where they're not projecting any loan losses, really. Very little loan losses. So they're assuming real estate won't crash in the major markets in Canada. So I'll attach a link to that in the information section after the show's over. MMT in theory sounds good. It's just like in socialism. Like socialism in theory, to help people out, everyone will be treated equally. In practice, though, you get the Soviet Union. In practice, you get bad countries in Africa. In practice, you get Mao's China. In practice, you get Venezuela, okay? So in theory, socialism sounds good. Even Ludwig von Mises said this, okay? Ludwig von Mises was born and raised in a socialist country in Austria and saw Austrian hyperinflation, Austrian economic central planning. They had a housing boom and then an enormous bust. Their banks all went bust. So in theory, socialism sounds good. In practice, it's totally bad. And then, of course, and I hear this all the time from socialists that, that wasn't real socialism. That doesn't count. So MMT, same type of people. A lot of the MMT people I met 8 to 10 years ago when I woke up and was a stockbroker and was learning Peter Schiff and trying to figure out answers during and after the 2008 financial crisis. A lot of the MMT people I met back then were very hardcore socialists. They did not want anyone making a profit, and they were telling me, they were smiling, telling me how great of a success story China was. That China was the best example of MMT we were going to see in our lives. That's what they were saying. And I don't want to criticize China too much. I criticize every government. You guys know this. No government on planet Earth is really doing a good job right now. But a lot of people are way too optimistic about the problems in China. There are good things in China too. There's a lot of entrepreneurship. China has a long history of that. But what the Chinese government is doing with social credit score and other stuff is just bad. Plus, and this goes back to Austrian school economics with China, they have had an artificial boom for over 20 years. Like 25, 30 years, they've had an artificial boom. And with Austrian School of Economics, and I know there's a couple either paid China trolls or Americans who hate the United States now and like China, but once you go into a enormous amount of central planning, Austrian School of Economics is very clear about this. You will have an artificial boom. You do not know how long it will last. You will change the rules. You will devalue the currency. You will do a bunch of games, moving the goalposts, lying, cheating, stealing to keep things going, and then eventually you will have a bust. Okay? This is the problem with economic central planning. Massive misallocation of resources. And to say that China cannot be judged on any Western economic metrics, so then you can't judge anyone on free cash flow. You can't judge anyone on debt to equity. You can't judge anyone on normal metrics like that, because you know what? At some point, China's going to have a big, big problem. I don't know exactly when, because the Chinese have been very good at delaying things. I know people that have been predicting China was going to collapse, 5, 7, 8 years ago. They're wrong. But at some point, all this misallocation of capital, many trillions of dollars, this enormous credit bubble in the last 10 years, that's the largest in world history. No one's grown a credit bubble faster. It's almost up to it's almost up to $50 trillion in credit in only 10 years. No one's done that. 10 years ago, China had almost no debt. Their debt was tiny. They're blown through their reserves. So at some point, they will have a bust. Just because they have a strong, powerful government with a strong military and most of their citizens are brainwashed with propaganda does not mean that they can avoid the bust, okay? They will eventually have some type of bust. Maybe foreigners will refuse the RMB. Maybe foreigners will want to renegotiate some type of new deals where China cannot pay in RMB, or China has to put some other type of collateral down on their economic deals. Okay, the US and China are both lying. There's actually a really great economic cartoon. I'll show you guys this one of these days. Hedgeye just released this too. And they have a cartoon between an American and a Chinese person arguing over who has the better fake economic data. Okay, it's hilarious. It's one of the best Hedgeye. The Hedgeye cartoonist is great. He has this great economic cartoon now about Trump there that you guys are seeing. But the China-US argument about who has the best fake economic propaganda, economic data is just hilarious. But all governments, guys, especially the ones that get large, they get complacent. The ruling class, the bureaucracy, the large corporations, they don't want to do any more innovation. They want to protect the status quo. You can go back through history. There's countless examples of every empire. This is why the British Empire didn't implement the automobile faster, because the horse and buggy whip companies were lobbying. And there was rules, regulations, taxes. There were all these problems with infrastructure about expanding the roads for automobiles. There are all these weird rules about driving automobiles in England. I mean, I could go on and on. There's just countless examples about once an empire gets to a certain level towards the end with corruption and immorality and waste, fraud, corruption, abuse, that it just doesn't become entrepreneurial anymore. And the people in power just want to maintain status quo and lie, cheat, and steal and take everything they can before the collapse. Okay, I'll take a look at your listener questions and comments. Actually, one second. Let me look here at the VIX is still around 1287. The VIX has been capped for now. That leverage short volatility trade, those hedge fund managers and those investment banks are desperate to squeeze every last drop of blood out of that stone or go pick up loose change off the freeway. I don't think it's a very smart move to be doing this leverage short volatility trade. I also don't think it's smart to go long the VIX. There's other ways to do this. The dollar index it got knocked down from 98 and it's still at 97.48, so we don't know if the dollar rally's over yet, but I'm not convinced. I think the dollar rally is still going, but we'll see what the dollar rally does in the next couple weeks and months. If it can get over 98, stay over 98. If it can have closes above 98 for quite a few days, maybe a couple weeks, and it could go to 99 pretty quickly, and then that's going to signal more trouble. Because there are people who look at the dollar index charts, like David Brady and others, and yes, he's been wrong in the past on some of his calls, but he's adamant that if the dollar rally keeps going higher, it's going to just cause massive, massive damage to the rest of the global economy. The 10-year Treasury, the stock markets have stayed pretty high. They have not really fallen. So the stock market seems to think then that QE is eventually still going to happen. Trump's going to get his way. That's how I think the stock markets are pricing things in. That even though the Fed didn't cut rates or announce QE or anything like that, that Trump is eventually going to get his way. So this is not a fundamentally driven stock market rally at all. Obviously, you guys know with the fundamental stuff I've been covering, the fundamentals just get worse. The real global economic data just gets worse. So this is a liquidity-driven, flight capital-driven, central bank-driven stock market rally. The 10-year bond is at 2.53. So it looks like a lot of people are going into bonds too. Either that or the Federal Reserve is in there manipulating that, trying to cap that. The plunge protection team. Okay, so I'm going to take a look at listener questions and comments now. It's an election cycle tactic in which Trump will support policy to keep the bubble inflated to maintain favor with his base. Well, Obama tried also to do an infrastructure program too. And he said he spent $1 trillion and there were supposed to be all these shovel-ready jobs. And I think a lot of the infrastructure money that was spent was a dud. So just because a politician promises something doesn't mean it's going to end up happening. But the markets tend to say, oh, this is bullish because it's going to create jobs or something like that. The market right now, and there's another really good economic cartoon that describes this really great, is a lot of market participants are not thinking long-term and they're looking at any news they can to find anything bullish. So the fact that the Fed didn't raise rates, that there may be rate cuts soon, that there may be QE soon, a lot of short-term oriented people see that as very, very bullish for stocks still, despite the economic data that is coming out. And we did have some jobs numbers that were good, but I would say the jobs numbers just indicate that more people are getting 2 or 3 part-time jobs to pay their bills because their costs are going up, their cost of living. And it's not because they're living lavishly, it's because their normal everyday bills, healthcare, food, rent, those type, and now gasoline, those things are all going up. Dean says President Trump has to know this monetary system is ready to explode. Well, it would be nice if he actually came out and told us. Unfortunately, that's not really how politics works. Once he's in power now, he's not going to tell the truth a lot. When he was candidate Trump, and you see this in the economic cartoon there, he correctly said that the stock market is a big fat Fed-fueled big fat ugly bubble. Okay, the economic cartoon has that mislabeled because he called it a big fat ugly bubble during one of the debates, I believe, and on his Twitter. But it's still a good economic cartoon. I like it. It's really funny. But the infrastructure plan, that's interesting because the Democrats are claiming that they will do this $2 trillion infrastructure plan with Trump. They will compromise, and I'm surprised they would do that. I'm surprised that Chuck Schumer and Nancy Pelosi and the other Democrat leadership would give Trump any kind of win before the 2020 election. I'm really surprised. Maybe they're going to spin this some other way, or maybe they know that the Republicans are going to kill the infrastructure deal, and they can turn around and blame it on someone else and say, hey, we supported the infrastructure program. It was those stupid Republicans that didn't. Or Trump screwed up somehow, and that's why this bill didn't get passed. But from what I heard, Kyle Bass had a private meeting. He disclosed this in an interview, I think on the Hedge Eye interview that he had, that's an hour long, and he said he had a private meeting with a couple of the top aides for Nancy Pelosi, because he also lives in San Francisco, which is Pelosi's district. And the top aides told Kyle Bass straight up that she's not helping Trump at all. That she wants him gone. She doesn't want to give him any wins where he can say, look, I got a deal done. I helped the American people. So Nancy, according to the aides, they said that Nancy Pelosi wasn't going to give Trump any wins at all, wasn't going to help him at all. And then they went on to use the analogy, I was surprised to hear this analogy, that the Democrats, especially Pelosi, thinks that Trump has taken the economy hostage and that the Democrats want the hostage shot. So that was interesting to hear. I don't know how if the Democrats are going to say that they're going to go along with the infrastructure plan, and then they know the infrastructure bill is going to fail. It'll be interesting to see how they spin it. They'd probably spin it to say it was the Republicans' fault. But the article that I read on the infrastructure plan, the best one, said that the Republicans aren't supporting the $2 trillion infrastructure spending, that they're already worried about how quickly the debt is growing, the national debt is growing, and the budget deficits. Hello, Daniel. This was going to end badly before Trump took over. Trump inherited a mess. So maybe with his supply side economics, this will accelerate things a little bit, but this thing was going to end badly regardless. The emerging market, excuse me, sorry, a little brain fart there. It's almost midnight. It's almost midnight here. The emerging markets are a mess. Japan's a mess. China's a mess. The European Union's an enormous mess. Long term, the U.S. is an enormous mess. In the short term, the U.S. economy looks the best on a relative basis, but we are being given a lot more rope to hang ourselves with, especially if Trump gets those rate cuts and then starts to do QE and he pressures the Fed into QE. Oh boy. It's going to be very interesting if he gets those things. The president after Trump is going to inherit an even larger mess than Trump did, if Trump gets those things. Because if Trump gets that QE and gets those rate cuts, that will be another temporary artificial boom for another couple years at least. Although at this point, guys, whether it's China or the U.S., all this economic central planning and intervention is law of diminishing returns. Hey, Dean, thousands of people are dying anyway. Children are not being born because there's too much inflation and taxes. The cost to raise a kid in the United States is like many, many hundreds of thousands of dollars now. For food, clothing, education, healthcare, all these things. And this goes back to deflation, okay? The politicians, the Keynesians, the central planners, the central bankers, the academics, they won't allow deflation. And the real economy needs falling prices. But the politicians don't want. They need to sell you that the GDP is going higher, that they're helping the economy out, when in reality, your bills are going up, and even if there's inflation, deflation, or whatever, your taxes are being layered on, increased across the board. But that's hurting people. If you're rich, it doesn't hurt you as much right now, unless Bernie Sanders wins or one of his puppets that is also running. But then you'd probably, instead of those guys getting hit with a wealth tax, the ones who are saying they'd voluntarily pay, I don't believe them. They'll probably just either stop making investments or move their money out of the country or move themselves and their money and their families out of the country. Because look at France, right? When France jacked the taxes up sky high, didn't the richest French people, most of them almost all leave, right? And now you have a lot of Frenchmen leaving to go to England and elsewhere. So politicians think, and this is stupid, but they routinely think this anyway. A lot of them don't study history. They routinely think that raising taxes, whether you're an Illinois state politician and there's a huge pension fund shortfall, or your state is running a budget deficit, or in California, they routinely think that raising taxes will solve problems. And you know what? Normally, maybe in the short term, raising taxes will help a little bit, but then you end up killing the golden goose. Corporations leave. Productive people leave. You destroy people's standard of living. And just people say, you know what? I'm not making the investments into my business, or I'm moving my business out of the state. I'm going to hire lawyers and I'm going to pay like a state tax or something to get out of there. And the politicians, I can tell you, I've had discussions with some of these guys, and I've read their thoughts and comments and listened to interviews over the years. I've been doing this. A lot of them do not think about that, especially the California ones. The New York and California ones are really arrogant because they think that New York and California are better, and they think that these businesses and the people will stay there, and that's not what's happening. Look at how many corporations have left California. A ton of them have. And you guys know, if you followed my channel for a long time, you knew I grew up in Southern California. I lived there for a very long time. And I left in 1999, and I have not been back since. And I will never move back there unless the taxes are slashed drastically, the rules, regulations, all that stuff. Wow, this troll is talking about Tesla, and I didn't even mention really anything about Tesla. Wow, I had this troll. He put, like, he just typed in, he must have had these messages queued up. He just typed me a dozen nasty messages all in, like, the span of a minute. That's pretty impressive there. He must really hate me. Must be a Keynesian. Or he works at one of the Wall Street banks. If someone traced his IP, he probably works at one of the banks. He was saying how bad my content is, my channel is, how I don't know anything about Tesla. You want to talk about Tesla? I have a few more minutes. Tesla raised a little under $2 billion in capital. Very rarely do you see any publicly traded... I've been doing this for 10 years now. Very rarely do you see any publicly traded stocks when they raise capital like that, even if they have a $50 billion or $60 billion market cap, the market dings them 10%, 15, 20, sometimes more than that. If it's a really bad capital raise, when the stock is already down and then management raises capital, the stock market sends a clear signal to management that you should not be raising capital when the stock is down. You did it at a bad time. And guess what? Tesla stock actually rallied. It went up, I think, almost 5% on the news of the capital raise. Now, the only rational explanation that I can think of for why, despite a capital raise, that the share price would go up, because I can't really think of any other company where that happened, where they did a capital raise and the stock price went up and the market didn't ding them. The only rational explanation I can think of is that the shorts who were short Tesla covered. That's the only, some of them. That's the only rational explanation I can think of for why the Tesla share price would actually go up almost 5% after a capital raise announcement. Now, Elon did announce he's going to buy 25 million shares, but still, it's dilution, and it's looked at as bad. And almost every other company, I'm trying to think of any examples that don't meet that, but I can't really think of any off the top of my head, and I've studied a lot. I've traded, invested a lot of different companies over the years, covered them as a stock analyst too, professionally for my day job. And I cannot think of any other company that did a capital raise like that where the stock went up like that. So the only rational explanation I can think of is that some of the shorts and their thesis, Grant Williams brought this up, a Real Vision Television and Things That Make You Go, He's talked with a bunch of the Tesla shorts because he's involved in that Tesla Q stuff with QTR and Mark B. Spiegel and Montana Skeptic and those guys. And he said some of the shorts said that they would just give up on shorting Tesla Motors more if Tesla did a capital raise. So that would be my explanation, my rational explanation, other than maybe market manipulation or something really screwy, for why Tesla shares went up when they did a capital raise. Yeah, the guy's name is Daniel Saravea or something, and he put 12 different all at once, well, in about a minute or two span. Just nuts. But I've been getting a lot of trolls lately. I just can't, I don't want to deal with that stuff anymore. It's just such bad negativity. I mean, the reality of the global economy and the moral bankruptcy in the United States that just gets worse. It's bad enough having to deal with that. I just don't want to deal with people who just have negative energy bringing that on my channel. Because I am trying to get you guys the truth, and I will change my opinion if the facts change. You guys know that. I'm following the truth. Unlike the mainstream media, unlike the mainstream financial media, I am pursuing the truth. Unlike a lot of people in the gold community now, unlike a lot of people in the alternative media. Because unfortunately, a lot of people in the gold community now have really bad confirmation bias. And if they look at a story, they either ignore it or they're grasping at straws for any type of story that fits the China good, U.S. bad, gold going, $5,000, $10,000 in the next month or two narrative. Douglas says that the American president is just a puppet. He takes orders. Whoever did 9/11 runs this country and possibly the whole world. The official story of 9/11 is impossible. Yeah, I agree with you on the official story 9/11. It's the same thing with the Kennedy assassination, guys. I don't know if we're ever going to get the full truth for any of those things. The American president, to a certain extent, is the puppet, and to a certain extent, the American president has some power. So it depends. So if the American president wants to start a war, the military-industrial complex will give him a high five. Okay, it just depends. If the American president wants to do a certain type of project, maybe. I wouldn't say he's a puppet for everything. The dollar rally is still ongoing. Pablo says dollar has been bullish lately. In my opinion, Pablo, the dollar rally is still ongoing. I don't see any evidence that the dollar rally is over. There are a lot of people in the gold community that are trying to say, they keep repeating all the time that the top of the dollar is in. But on a relative basis, the European Union is really bad. Emerging markets are really bad. There's now problems in China. Kyle Bass has outlined those. Go listen to his interviews and his thesis, how China's reserves are down a lot. Kyle Bass says that China's now below $2 trillion in reserves, and he thinks they're going to run out of reserves in the next couple of years if this continues. And he used Hong Kong as an example. Hey, Greg, thanks for the super chat. I appreciate it. There are certain things I like about Trump, but he's not doing everything he said he would do. I don't like a lot of his tariff plans. He's looking back through history and saying that tariffs help the American economy, but what he doesn't see is that tariffs eventually lead to counter tariffs and then wars. I think a lot. Briggs says the price of Bitcoin, he talked about it. I would say that the rally in Bitcoin and some of the cryptocurrency is people in China are worried, including CCP elites, and Kyle Bass, through his sources, said that a lot of the rich businessmen in China and a lot of the CCP elites in China, mainland China, they use Bitcoin and cryptocurrency now to get their money laundered out of the country, to get out of RMB. So if China's having problems and it looks like China is going to do a devaluation of the RMB in the near future, then you're going to see Bitcoin go a lot higher based on that. I haven't paid a lot of attention to the crypto markets, but if you have a little bit of crypto for diversification, like some Bitcoin and a couple other cryptos, I think you'll be okay. Just stay away from the initial coin offerings. And if you have too many different cryptos, too many of these altcoins, that's where you get in trouble. I have a lot of friends who just got too greedy with too many of the altcoins, and they didn't know any of the technical stuff, and they were just gambling that the altcoins, like with bad junior mining stocks. Okay, I'm looking through listener questions and comments. I'll stick around for a couple more minutes. I covered most of the topics I wanted to cover. Daniel says, look out for helicopter money that is coming to curry favor with the masses. Well, the problem with that, Daniel, is that if people are getting like a rebate check or some type of check, like a universal basic income check, right? Let's say everyone gets $1,000. Well, if everyone's getting another $1,000, right? Some people are going to pay off debt, and then other people are going to blow the money on dumb stuff. But that's going to that's more money more money in credit, chasing the same or fewer goods and services. More new goods and services are not being created. There's not as much entrepreneurship, except for some of the online businesses here in the United States, but the majority of bricks and mortar businesses, it is very difficult to be an entrepreneur with a bricks and mortar business because all the permits and rules and regulations and all these things that you have to comply with. Even a food truck and a food cart and all these things, like there has to be tons of compliance. Like I think you have to cook in most states, you have to cook the food in a commercial kitchen. Now, obviously everyone's not going to do that, but the people I think who are not doing that are breaking the law. At least that's some states where all the food for a food truck has to be cooked in a commercial kitchen. Okay, this is an interesting question. What about M1 versus M2 decline? Base money is declining rapidly. Well, velocity of money is also down a lot. Stagflation can also occur while base money is falling, because you have higher taxes being layered on, and you have wages that are going higher in the supply chain, and that forces businesses, either with devalued other currencies are devalued or their input costs are going up. If oil prices are going up and wages are going up, that means for your business, depending upon what business you're in, your costs may rise. And then you're eventually going to have to pass that on to the customer one way or another. Either you're going to raise your prices, or if you're a restaurant, you're going to lower your portion or portion size at the restaurant, or a combination of those things. So you can actually, you can actually still have inflation, just not as much inflation. You can't have hyperinflation with base money declining, but you can still have stagflation because capital is being misallocated, and we're in a global economy. So just because the US is not massively increasing the money supply doesn't mean the other countries are not, doesn't mean that the European Union is not doing QE, doesn't mean that China is not doing QE, doesn't mean the money is not being laundered out of China and into euros or dollars, and then buying up assets there, or real estate or other things. Hopefully that answered your question. Thank you, Pablo. I appreciate the kind words. Hey, man, I'm just trying to help people out the best I can, because I know it's tough out there. It's even tough for hedge fund managers, man. Hedge fund managers are getting screwed over because of these the passive investment bubble, the index fund bubble. And the index, most people don't understand this, but the index fund bubble, so when you buy index funds now and you keep dollar cost averaging in, at this point you're just chasing momentum. So it's a momentum trade. It's a massive momentum trade with everyone's retirement plan. This is a scam that Wall Street has set up. So yes, Wall Street is not collecting the massive fees that they were with mutual funds, because with mutual funds, Wall Street was taking, I think, like 5%. Some of these mutual funds were just enormous fee structure. It was 5 to 8% per year. So if you had like a gold fund or you had an emerging markets fund, for some of these mutual funds, Wall Street could take out, the mutual fund manager was just taking out massive fees. But the index fund bubble is set up differently than the mutual fund scam. And also with the passive investing, the index fund bubble, you have the largest, it's market cap weighted. So you have the largest companies, their market caps are getting even bigger, and it's not justified. So Apple, the fundamental, Apple had sales decline of $8 billion, and then they lowered their guidance, and the stock price since that announcement in November, the stock price is up like 40%, okay? 20 years, 10, 20, 30 years ago, with any company that had that big of a drop in sales, their stock would have crashed. So the new normal we're in is weird. And this is why a lot of professional money managers that have made a lot of money over the years for their long careers, they don't understand what's going on, because things that work for them in the past, certain rules that always work for them are not working anymore. It's broken. I think buybacks may be part of it, but I think Apple is in these index funds, and the index funds bought the dip. So even though individual investors may have sold out of Apple, the index funds, because Apple's a really large company in a lot of these index funds, they came in and bought the dip on Apple. So a lot of money came in through index fund buying. There's plenty of dominoes. The problem is that the people behind the scenes, this is why it's dangerous. One of my listeners put an excellent comment when I was talking about Kyle Bass in China. And he said Kyle Bass made a lot of money shorting mortgage-backed securities and credit default swaps, and he was a genius, right? He made billions of dollars for himself and his investors in a very short amount of time. He went against all the people on Wall Street. They called him a moron and all these names, right? And he proved them wrong and made a lot of money. Well, now Kyle Bass is betting against governments. And when you bet against government bonds, when you bet against currencies, right? Well, guess what? What have I been saying now for years? Governments can change the rules. Covertly or overtly, they can do backdoor bailouts. Governments can move the goalposts. Do you remember watching the Peanuts gang cartoons like Snoopy and Charlie Brown and Lucy? So governments, basically, Kyle Bass has a brilliant fundamental thesis, but then the government is like, the government or central bank that he's betting against is like Lucy, where Charlie Brown is running up to kick the football, and Lucy just pulled the football, and Charlie Brown just fell on his ass trying to kick it, and he just kicked it as hard, tried to kick the football as hard as he could, missed it, and fell on his butt. Or the field goal's already up in the air, and then the goalposts just get moved. This is the world we're in now. So I think that listener, I forgot the guy's name who made the comment, but it was a great, prescient, very insightful comment that it's very, and that's why betting against Japanese government bonds is called the Widowmaker trade. Because anytime the Japanese government bond market is in trouble, the Japanese central bank, the JGB, that's Japanese government bond, the BOJ, just steps in. It's after midnight, I'm getting a little tired. Hey, Billy, I'm glad you enjoy the podcast. Well, I think most people buy mining stocks and don't understand them. So they think the stock is down a lot and that it's a good value, but the company could be in big, big trouble. A lot of mining companies are still doing big mistakes. They're still underestimating their costs a lot. And their balance sheets, even though they did they had to make hard choices, and they've done a pretty decent job the last 5 or 6 years trying to fix their balance sheets, but that was under the assumption that metals prices would rally and it would bail them out and fix things. Wow, we have listeners all over the world. Someone's at the base of the Himalayas, excuse me. How do you have internet reception there, internet connection there? Say hi to Doctor Strange for me. That was an Avengers joke. Okay, well, that's it for tonight's show. Hopefully everyone liked it. And I just wanted to get this out there. I am working on another short video, and it's going to be called How Quickly is the U.S. National Debt Growing? And then talking about how much the debt has grown the last decade and some other things about that, including like annual U.S. tax revenues and other interesting things in there. I may be able to get it done in the next 2 days, but we'll see. But I'm pretty confident I'll have it done in a week or less. So that's it for now. Everyone have a nice weekend. Okay, bye.